It has been a period of significant progress. We have in place an operating model to suit our business and the right people in key roles across the business. We've delivered on our production and cost commitments to the market and have begun to regain cost competitiveness versus our peers. We're starting to see progress in a number of places which confirm we're on the right track. This is a testament to our focus on execution and the success of our inward investment program. You can see in our grade improvements in particular, cash conversion is much better and so is our cash flow. And importantly, we're seeing strong ESG performance. On highlights, we've committed to getting the basics right, and that's what you will see here. We've delivered strong year-on-year improvements in production. We estimate inflation running at about 12%, the impact of the high inflation around the world impacting AGA at around 12% this 2022. And we have limited the cash cost increase to half of that. Or in other words, we were able to reduce in real terms our cash cost per ounce in about 6%. That was helped by higher grades, better planning, efficiency gains, and fewer stockpile drawdowns, which helped offset that inflation. Underpinning all of that is our inward investment drive, which is starting to bear fruit, especially at Geita and Iduapriem. All-in sustaining cost was marginally higher, with improved production offsetting higher cash costs. Free cash flow was stronger, as mentioned, even after investing capex of 1.1 billion into our assets, investing 517 million in acquisitions, and paying 203 million in dividends. Our balance sheet is solid with low gearing and very strong liquidity. 2023 remains a transitional year for us. We remain focused on making more improvements and on delivering more consistent results in line with the targets we've set out. I would, however, underscore or highlight that we are proud to have been able to reduce in real terms our all-in sustaining costs by 10% during 2022, and we expect to have a further reduction in real terms by 2% in 2023. Nevertheless, more needs to be done, and this is where the Full Asset Potential program is working as intended. We have basically finished most of the diagnostics and have begun the implementation phase, and we expect to see the bulk of the results in 24 and 25. Obuasi is on track to deliver phase 3 at year end. We have the right people in place and the right organizational structure. We focus on improving operating and capital efficiencies. Our world-class exploration team continues to add value through a drill bit across our properties. Our technical team continues to progress our Nevada opportunity. We have a diverse portfolio and clear strategy to close the margin gap with our peers, using our Full Asset Potential process and bringing in new lower cost ounces already in the pipeline. We continue to improve our ESG practices from a high base. Our safety is among the best in the industry, and we have a 15-year track record on GHG reductions with more to come. We have a new, experienced, and highly motivated leadership team. They bring diverse, world-class technical expertise and experience operating across developed and developing markets. Our balance sheet is robust, with capacity to fund sustained capital needs, shareholder returns, and growth. We are focused on ensuring it stays that way. Discipline in capital allocation remains an absolute priority to us, and we have in place a clear dividend policy and leverage targets. Replenishing inventory in a competitive way is fundamental for any gold company, and we are among the best in that regard. Our aim remains to narrow the value gap with our peers by regaining cost competitiveness. The foundation is in place and working hard now to deliver.